Welcome back, climbing higher and higher, and now we've hit a century on the Nifty, while the Sensex is now trying to move towards a 400-point gain. The stock which is on my radar is Macquarie or Info Edge. It runs that recruitment platform called Macquarie. So every time you want to apply for a job, typically people go on that Macquarie platform, they upload their CV, and then you've got many companies who are clients of Info Edge, and then they will go through that list of CVs and hire you. So that's a bulk of their business. Now today, Macquarie has come out with a report on Info Edge where they've put a target price of 3,000 rupees, which means they're looking at a downside of nearly 30% from current levels. The stock price right now is closer to 4,200. They've added Info Edge to the Macquarie Asia's marquee sell list. And according to them, the bear case, the possibility of a bear case in Info Edge is 50%, while the possibility of a bull case is 5%. Now let's tell you why Macquarie is so bearish on Info Edge. 3,000 rupees is the target price. We're looking at a 28% downside. Well, the key reason is Macquarie did very well over the last 2 years because a bulk of their revenues would come in from IT recruitment. IT companies were hiring. In fact, employees were even looking at moonlighting. That was the extent of the IT hiring boom. But now, over the last 6 months, 9 months, IT companies have gone very slow on their hiring. In fact, for many companies in Q3 and Q4, the overall headcount declined. Now, according to Macquarie, this is going to slow down the Macquarie revenues. Also, when the revenues slow down, margins take a hit. So according to them, Macquarie's margins, which were at a peak of close to about 60% plus in Q4, is going to come down. And they were looking at the average over the last 5 years before this whole IT hiring boom. So they're saying margins will come down. Thirdly, they also say that the other businesses, which is their real estate business, they have an education business called Shiksha, they have a matrimony business called Jeevan Sathi. Well, these other three verticals are very small. They hardly contribute to the top line or the EBITDA, but at the EBITDA, most of these companies are still making losses because of the high ad spend that they do, particularly in, say, 99 acres, their real estate arm. The ad spends and marketing spends are so high that these companies are making losses. So according to Macquarie, the path to profitability for the other ventures is also quite distant, and they don't see a clear path when it's going to. And the final reason is, if you remember this year, Info Edge had also written down their investment in 2 startups. The latest one was also a real estate platform called 4B Networks. Like how 99 Acres is a B2C platform, 4B Networks was a platform for brokers, the real estate brokers. It was a B2B platform. And the company had written down their investment in Q3. So on the whole, if you look at the consolidated P&L, the company had written off close to about 500, 600 crore in FY23 itself. And that, according to Macquarie, could also pose a risk, right? What if there are other startups on account of the funding winter, etc., the crunch that Info Edge has to start writing off? So these are a handful of reasons why Macquarie is quite cautious now on Info Edge.
Okay, and that's a call that you can't ignore because the downside is pretty big from what they're talking. They're expecting 3,000 rupees in the stock, and we are above 4,100 on Info Edge as of now. But that's an interesting brokerage report to put on the table for sure. By the way,